The United States national debt is over $36 trillion and rising. To put this into perspective, that's more than the combined GDP of China, Japan, Germany, and the United Kingdom, and every year the government spends more than it brings in, borrowing billions to just cover its interest payments. Economists warn that this unsustainable trend could lead to inflation, a weaker dollar, higher taxes, and ultimately a loss of global trust in America's financial leadership. And for decades, all the proposed solutions have followed the same script: raise taxes, cut spending, or print more money. But in 2025, something different happened. Senator Cynthia Lummis introduced legislation urging the US government to start acquiring Bitcoin with the goal of building a reserve of 1 million BTC. Not just to diversify assets or hedge against inflation, but to explore whether Bitcoin could one day help pay down America's national debt. It's a radical idea, but could it actually work? Well, that's exactly what we're going to be getting to the bottom of today. We're going to break down how that plan would unfold, what it would take for it to succeed, and whether Bitcoin really could play a meaningful role in solving one of the most urgent financial crises in American history. But before we talk about Bitcoin as a solution, we first need to confront the full weight of the crisis it's being proposed to fix. As of 2024, the United States national debt surged to a figure so enormous it almost feels abstract. But behind that number is a very real problem. The federal government constantly spends far more than it actually collects in revenue, relying heavily on borrowed money, not just for emergencies, but to fund its regular operations. Now, a large share of this spending goes towards long-standing public commitments like Social Security, Medicare, and Medicaid, which are programs that millions of Americans rely on. Then there's defense, which, while critical to national security, constantly commands a staggering portion of the budget. In fact, the US spends more on its military than the next 10 countries combined, raising questions about priorities as other sectors face cuts or underfunding. Regardless, in recent years, a new line item has increasingly begun to take up a rather significant portion of overall federal spending: interest on the debt itself. That's right, the US now spends more each year simply servicing its debt than it does on vital programs like transportation, housing, or veteran benefits. In fact, in 2024 alone, they spent over $880 billion just on interest payments. And this isn't funding the future, it's financing the past, a compounding cycle of borrowing money just to stay afloat with no clear end in sight. Historically, the national debt has grown to an average rate of around 5% per year. But if that trend continues, the projections are alarming. For example, in less than 2 decades, the debt could reach $88 trillion. Within 24 years, it may grow to $115 trillion. And by the early 2050s, it could surpass $150 trillion. That said, this kind of growth isn't just unsustainable, it poses a long-term threat to the dollar, the economy, and the financial security of future generations. The deeper the debt gets, the fewer tools we have to escape it, which brings us to a new unconventional idea, one that centers around a digital asset once dismissed as fringe speculation. In early 2025, a proposal emerged that pushed the boundaries of how governments think about national reserves. Senator Cynthia Lummis of Wyoming, long known as one of Bitcoin's most vocal supporters on Capitol Hill, introduced legislation that took the conversation far beyond regulation or taxation. Her bill, known as the Bitcoin Act, proposed that the United States Treasury begins acquiring Bitcoin as a strategic reserve asset. The plan called for the Treasury to accumulate up to 1 million Bitcoin over a 5-year period. Unlike previous government programs funded by debt or taxes, this acquisition would be budget neutral. It would use Federal Reserve remittances, which are surpluses the Fed returns to the Treasury each year, meaning no new taxes or borrowing would be required. The Bitcoin acquired under the plan would be held for a minimum of 20 years unless used specifically to pay down national debt. Although Senator Lummis' proposal was initially dismissed as a fringe idea, it wasn't long before it actually started to gain attention. The proposal was endorsed by President Donald Trump and began attracting bipartisan support from lawmakers concerned about inflation, currency debasement, and rising debt. The vision is ambitious: acquire a massive reserve of Bitcoin, hold it long term, and if its value explodes in the coming decades, use it as a lever to reduce the national debt. But the big question still remains: even if the government does acquire 1 million Bitcoin, would it actually make a meaningful dent in the debt? Well, let's find out. Now, one of the most overlooked aspects of investing in crypto is trying to figure out what is the best protection for your hard-earned crypto. This is something most people drag their feet on, as I get it, it's not the sexiest of topics, but it is arguably the most important. And the last thing you want is to have your crypto stolen, like myself. Yep, that's right. Back in 2019, I had my entire crypto portfolio drained by the Lazarus group because I didn't take my crypto storage seriously. And no, I am not joking. If you guys want to hear all about that story, be sure to leave a comment down below. It is a crazy one. But the truth is, if it wasn't for my procrastination and lack of taking my crypto storage seriously, that theft could have easily been prevented if I was using a cold storage wallet instead of exchanges and software wallets. And that, my friends, is where our sponsor and industry leader Trezor comes in with their newest addition, the Trezor Safe 5. Now, while my hack happened back in 2019, unfortunately, crypto theft is bigger than ever before, with over $2 billion in stolen crypto this year alone. And sadly enough, the Lazarus group is still out there and is responsible for most of that today. Keeping your funds on exchanges, software wallets, or if you're a real psycho, on a piece of paper alone can lead to a disaster. And if you do get your funds stolen, the only guarantee is that you will be crying yourself to sleep that night. Now in 2025, Trezor Safe 5 is the pinnacle of retail cold storage with an EAL6 Plus secure element protection and support for thousands of cryptos, including your favorite coins. Trezor offers one of the most secure open source cold storage solutions on the market. And with mobile and desktop support, you can be rest assured that your addiction of checking your portfolio every 10 minutes is not jeopardized. So if you're ready to elevate your crypto journey and not cry yourself to sleep like I did, get your very own Trezor Safe 5 today and receive 10% off with the unique promo code DataDash. That's 10% off with code DataDash. At today's price of roughly $96,000, 1 million Bitcoin would give the US Treasury a digital reserve worth around $96 billion. In the context of America's $36 trillion national debt, that amounts to just 0.27%. Barely enough to register as a meaningful offset. To put this into perspective, let's say the bill passes this year and the government begins buying Bitcoin over the next 5 years as outlined. Even in an optimistic scenario where Bitcoin climbs to $1 million per coin during that time frame, the reserve would be worth around $1 trillion. A staggering amount, but still less than 3% of today's $36 trillion national debt. Now consider what it would take to make a real dent. To pay off just half of the current debt, 1 million Bitcoin would need to be worth around $18 million each. That's not just ambitious, it's nearly impossible to imagine happening within any near-term cycle. And even if, against all odds, Bitcoin reached that price of $18 million per coin, it still wouldn't solve the deeper issue. The debt itself doesn't stand still, it continues to grow every year, which means that for Bitcoin to remain relevant as a long-term debt solution, its value wouldn't just have to rise, it would need to constantly outpace the growth of the debt itself. Regardless, the idea of using Bitcoin to pay down the debt isn't completely off the table, but it does demand price levels and economic conditions that are far from guaranteed. So with that said, let's take a minute to zoom out and see what it would actually take for Bitcoin to grow fast enough to keep pace with America's ballooning debt. To understand whether Bitcoin could one day play a serious role in offsetting the US national debt, we need to project its growth not through wishful thinking, but through the framework that's actually defined its price behavior since its inception, the power law. Unlike linear assets, Bitcoin tends to grow along a logarithmic curve, where price increases happen in explosive cycles, but the long-term trajectory follows a predictable upward sloping band. Japan. This model smooths out volatility and reveals a constant pattern of exponential growth decelerating over time. So let's say Bitcoin continues to respect the power law and grows at a compound annual rate of 20 to 40%. At 20% growth, it would take about 32 years to hit $18 million per coin. At 30%, around 24 years. And if it maintains 40% growth, which is aggressive but has historical precedent, it could reach that level in just 19 years. Now let's compare that to the national debt. At its long-term growth rate of around 5% annually, the $36 trillion US debt would expand to roughly $88 trillion in 19 years, $115 trillion in 24 years, and $156 trillion in 32 years. So even if Bitcoin reaches $18 million under the power law curve, 1 million Bitcoin would be worth around $18 trillion. That sounds like a breakthrough until you stack it against the projected debt at those same points in time. In 19 years, it would cover just over 20% of the debt. In 24 years, about 15%, and in 32 years, only 11.5%. And that's assuming no dilution, no black swan events, just pure, uninterrupted Bitcoin growth. But then there's another implication hiding in those numbers. If Bitcoin even did reach $18 million a coin, that would imply a total market cap of $360 trillion, assuming 20 million coins in circulation. That wouldn't just make Bitcoin a dominant asset, it would make it the center of the global financial system. And at that scale, Bitcoin wouldn't be supplementing the dollar, it would be challenging the foundations of fiat itself. For Bitcoin to play any meaningful role in addressing the US debt, it would have to become not just a strong asset class, but a monetary force capable of rivaling entire economies. And if that were to happen, it wouldn't just be about paying off debt anymore. It would redefine the role of governments, central banks, and monetary power itself. So with that said, let's take a step back to ask what it would really mean both economically and politically if the US seriously committed to accumulating Bitcoin in the first place. If the US government seriously pursued a plan to acquire 1 million Bitcoin, the ripple effects would be immediate and far-reaching. This isn't just a theoretical portfolio shift. It would alter financial markets, legal frameworks, and potentially the balance of power in the global economy. The first challenge is the buying process itself. 1 million Bitcoin represents roughly 5% of the total supply that will ever exist. If the US government tried to acquire that much even gradually, it would send a massive signal to the market. God forbid they currently own a little over 200,000 already, but prices would likely surge long before the government finishes buying. Not because of success, but because of scarcity and anticipation. That might sound like a good thing since rising prices increase the value of the reserve, but it also makes the goal of accumulation harder, more expensive, and politically risky. Every additional coin costs more, and the entire strategy risks backfiring if the markets become too speculative or volatile during the buildup. The US could end up chasing an increasingly expensive asset without ever securing enough to make a meaningful dent in the debt. Then comes the legal barrier. As it stands, the Federal Reserve is not authorized to hold Bitcoin on its balance sheet, so that would need to change. The entire structure of how digital assets are classified and managed within the federal system would also have to be rewritten. And this isn't a minor regulatory tweak, it's a foundational shift in how the United States defines and stores value. Overall, accumulating 1 million Bitcoin wouldn't be enough to erase the US national debt. Not today, not even decades from now. The math makes it obvious. At best, it's a sliver of what's owed, but perhaps that's never really the point. What Senator Loomis has proposed is more than just a fiscal maneuver. It's a philosophical shift, a recognition that the foundations of the current financial system are aging and that Bitcoin, with its scarcity, transparency, and global neutrality, might be more than just an asset. It might be a lifeboat. So yes, the plan is bold and maybe even improbable, but at the very least, it's better than doing nothing. which is essentially what the government has been doing for decades. In a world where debt grows faster than GDP, where fiat currencies are printed at will, and where trust in institutions is eroding, bold ideas may be exactly what's needed. Accumulating Bitcoin won't solve the debt crisis overnight, but it could prepare the US for a future where the rules of money have changed entirely. Because the true value of Bitcoin might not be in paying off what's past, but in protecting what's ahead. So with that said, the question is no longer whether the US can afford to bet on Bitcoin, it's whether it can afford not to. But what are your thoughts? Do you think the US accumulating 1 million Bitcoin is good for the US government and the United States as a whole? Honestly, is it a good thing for the world? Let me know in the comments section below. And if you found this video informative, consider hitting that subscribe button so you don't miss out on videos like this in the future.